right. With that, we'll be going to our next fireside chat that will be moderated by Trang Nguyen. She is an executive member of Trusted Insight, as well as a co-founder of the venture capital firm TI Platform Management. She has worked for many years in the world of investment and finance, and is going to host a conversation about the journey of an iconic serial entrepreneur and, more broadly speaking, about the future of fintech. Please welcome Trang Nguyen.
Thank you, everyone. Fintech as the sector has emerged in the last financial crisis. According to Crunchbase, 19 of the unicorns are in financial service, collectively valued close to 500 billion. Fintech investment has tenfold in the last 10 years. And one out of the next 5 unicorns will be fintech companies. We have seen massive fintech exits recently as well. Like, for example, we see Plate acquired by Visa for $5 billion, Credit Karma acquired by Intuit for $7 billion. Today, we're very fortunate to have Jeff Cruttenden with me on this panel to discuss his journeys as an iconic, serious fintech entrepreneur, and to discuss the future of fintech. Welcome, Jeff.
Hi, happy to be here.
Great. And for the audience, Jeff is currently the co-founder and general partner of the Treasury, that TI platform has a very privilege to anchor. Treasury is a global platform created by him, Eli Broverman, the co-founder of Betterment, and the co-founder of Bryce, to support the most ambitious ideas in fintech. He's also the co-founder of Acorns, and for the audience, Acorns is the leading financial wellness system that have 5 million users in the US. Am I correct, Jeff? Maybe more. Jeff is also co-founder of Say, which is a technology platform that revolutionized what it means to be an investor and ownership of corporation, and empower investors to access their full ownership rights. With that being said, why don't we just begin with what was that in your work at Acorn that led you to start Say, and then from Say to Treasury. So Acorn is a mobile first and app first fintech company, and it's built a significant brand with Millennium in the US. It's a excellent user experience. Let's talk about the company.
Yeah, so we started Acorns back in 2012, actually on Leap Day. I was a senior in college at the time, and our goal was to distribute investment accounts like an app and not like traditional financial services. And so to fully take advantage of the smartphone and app distribution, we had to really make the big decision to invest a much smaller decision. We had to reduce all of the emotional friction that's been associated with investing. It's been built up as this big decision that's made later in life when you have a lot more money. And yet investing is best done early, and young people are very interested in investing. We're seeing that today, of course, more than ever. But back in 2012, when I was in college, most of my classmates were interested in investing, yet few had investment accounts. Even people that were studying economics or concentrating in finance didn't have investment accounts. And there were really a few issues with the sort of the psychology behind it. So people thought that they needed a lot of money. They thought it was a big decision. And when presented with too many options, people tend to make no decision or delay it significantly. So we really cut through that. We helped pick the amount of money that someone could start with. We could help them find their spare change. We streamlined the investments into portfolios that corresponded with risk. So people weren't thinking about what to invest in, just thinking about, do I invest? And our onboarding process used information that was all top of mind. You didn't have to pull out a card or anything. And in order to build that simple customer experience, we actually had to take a lot of responsibility, under the hood on our side in terms of regulatory infrastructure and corresponding technology. And so, it was a pretty simple idea to start with, but to actually build a scalable platform that could serve, many small investment accounts and handle small transfers of funds and actually carry those accounts economically, we had to build out our own self-carrying or self-clearing broker-dealer. And so that's sort of like the less sexy part Acorns that was really necessary to deliver an excellent customer experience. The other opportunity that we had is Acorns was launching as a new brand, and we were nervous at the time. I think a lot of founders in fintech are nervous. How do you launch a new brand in an industry that relies on trust? But one advantage we had being mobile first and mobile only is that people tend to trust apps. People expect an app that they haven't heard of to revolutionize some aspect of their life regularly. So that was actually, I think, an advantage for us in launching a new brand in Acorns to get people interested in investing, especially when the other financial services apps out there really weren't intended to onboard customers. They're more of an afterthought for existing customers.
Right. So I think you mentioned that Acorn actually builds your own regulatory infrastructure, right? Can you talk a little bit about some of the challenges that you face, face in terms of regulatory challenges, and what are some of the advice that you're giving for, the fintech founders in the audience?
Yeah, so when we were getting started, we wanted to get to market as quickly as possible. We had the idea to round up spare change, help people find the money to invest, help put them in straightforward, low-cost portfolios of index funds. And what was frustrating is one of the biggest obstacles in starting the company was actually finding a partner, a clearing firm to carry these small accounts. We could put together the technology on the front end, but we were a little reluctant to dig in on the back end and back office initially. And fortunately, we stuck with it or kept at it, and that huge problem that seemed insurmountable actually proved to be one of our best assets once we solved that problem. And so it took about 2.5 years from starting the company until launch, in part because we actually built that regulatory infrastructure from scratch. And Acorns, to actually facilitate the customer experience, we actually have to have multiple companies that interact with one another in a very careful way to maintain regulatory compliance and deliver a seamless investing experience to the customer. I think it's unusual to sort of take the time for that process. When you look at your roadmap, you want to get to market quickly, but to do this right, we really had to undertake that multi-year process. Now, when we started the company, if we knew exactly that's how we would do it, we could have probably got it down to maybe just over a year. But we spent a good amount of time sort of trying to find, a partner versus building it ourselves. And, I think for founders out there, I think it's important to have a grip of the rules and regulations. Fintech is intimidating because it's in many cases regulated. And I don't think you should be afraid to be regulated. I don't think you should be afraid to really understand the regulations that you're dealing with. And in fact, I think founders really need to own that side of the business. It's sometimes tempting to outsource it to lawyers or talk to other advisors and consultants that can help you navigate it. But it's something that you are capable of understanding. If you dig in, it's generally worth it. And if you need to build something, you should understand what that actually entails, because even if you find a partner that's willing to, power a part of your product or app, you may run into trouble when it comes to scaling that. So for us at Acorns, we were opening thousands of accounts a day. We couldn't have actually partnered with someone, even if they said yes. Fortunately, no one did. Their compliance teams wouldn't even have the tools to approve accounts that rapidly. And so when we really think about scale, when we really think about owning our destiny, building out that infrastructure was essential. And today there are some companies out there that can unlock that for other companies and serve other fintechs. But when we were getting going, we really had to build it all ourselves, and that actually led us to see other opportunities. And another opportunity there, by the way, is when you own that side, so say you want to deliver an exceptional customer experience, which I think most people do in fintech. That's one of the biggest opportunities, right? If you don't actually have any regulatory responsibility, you hand off those customers to someone else. Whenever you want to, change your product, even change its design, change the experience, et cetera, you may have to go get approval from this other entity or group that may or may not share your goals or sensitivities to customer experience. And that's bad, one, because if there's a disagreement, it could kill your product or significantly impede it. And two, it also changes the dynamic for your own product and design teams. You know, when you know that you can build anything and really own your own product roadmap, it's a lot more inspiring to the team, and the team can work much more cohesively. If there's this outside entity, sort of this mysterious group that no one really understands how they make their decisions or why they make their decisions, it impacts the whole business, including leadership.
Right, right. So I think I hear is that the key is to really grab the regulatory, understanding yourself, and if you can, build it internal. So did Aecon go into?
I would say don't let it grab you. Don't let it grab you.
Yeah, don't let it grab you. Exactly. You had to grab it. Yeah, you need to be an expert in that sector if you want to go into fintech. So did Aecon go international, and is that a successful financial outcome for you?
Yeah, so one interesting thing, especially for consumer fintech in the United States, especially mobile first or app first consumer fintech, it's a mouthful, is that apps have a global presence, and so apps in the U.S. get attention around the world, whether or not those products are necessarily usable. And you can geographically restrict app downloads by country, but even initially when we were launching Acorns, there were downloads in like 100 countries on Android before we restricted downloads a bit earlier. And it's because the word gets around. Tech has a global presence, yet fintech is more geographically restricted. And so that's an opportunity for fintech and getting the word out there. Now, it's difficult to expand internationally because of local regulations but the ideas get out there quickly. And so there's opportunities, I think, to partner, especially for US fintechs internationally. So yeah, so at Acorns, we partnered with a group in Australia. That product became Acorns Australia. It's now known as Raise. And what was awesome, the founder there, the CEO there, George Lucas, loved our product. It would have been more difficult to tell him no than yes. And it helped us, practice scaling in a separate market. And so it was a great union and a great outcome. I think from a VC standpoint, they like you to focus in the US and make sure that you tackle that market. But the clock is ticking once you get started. Other countries are going to reach out, other founders and entrepreneurs out there to partner. If you don't respond, they're probably going to keep going and do it with or without your help. So I think there exists some significant opportunities for international collaboration among founders. And when you're looking for a partner, it's not necessarily someone that it's not necessarily extending the brand, the name of your company. There are other companies and founders out there and partners that share a mission. And so I think you'll potentially see in the future, companies teaming up, especially those that share a mission.
Right. So the key is to find the right partners when you can go international. I want to go back to some of the things that
entrepreneurs too.
Entrepreneurs.
Yeah.
Okay, partners who are entrepreneurs and who really understand the business and who can expand international with you. So the other thing I want to go back to one of the points that you mentioned earlier, which is in Aecons you can or create several business. So is Say spin out from Aecon, or is that like how did Aecon lead to Say?
Yeah, so one of the great things about Acorns too, and Acorns has multiple business lines that are part of Acorns, is that starting with investing is actually really powerful. And investing as a financial service is often introduced later in life, but we sort of flip that around at Acorns by offering investing early or first in many cases. And that's powerful because investing is inherently long-term, it's inherently aspirational, and it's a great lens through which to view the rest of financial service. Or financial services, I should say. One thing that we saw, because we actually built out our own regulatory infrastructure at Acorns, and we were responsible for a lot more than maybe your average company, is we had to deal with certain investor communications and proxy proxy communications. Now, at first, these communications were automated. We had a partner we didn't even know that we signed up with that was handling it, and these emails were sent, and they were horrifyingly ugly. And at first, it was just, compared to all of our other communications, the experience, they stood out. Like, oh my gosh, what is this? Is something broken? Did someone hack my account? They looked like faxes that were scanned. Upon closer inspection, these are actually really important communications. These are related to your rights as share owners, and in many cases, your right to vote your shares. And when you think about it, there's really two interests in a security when you invest. You have your financial interest, but there's also this governance or voting interest. Now, access to the financial interest, there's been a ton of innovation. I can track the value of it. I can trade. I can visualize my investments in many ways and access and trade, et cetera. Okay, great. But the half of investing related to the governance interest has seen very little innovation. And it's basically paper-based or ugly email-based. And it's pretty important. People own trillions of dollars worth of companies that impact all of our lives. And everyday people actually have the right to a lot more say than they're getting. And so Say was started as a separate company to give investors their say, and interfaces with clearing firms and broker dealers to help their customers get a better experience when it comes to voting their shares.
Right, and just to educate the audience, what is the impact for investor to exercise a vote? Because I think like some of the audience may not be familiar with that.
Yeah, so if you own stock in a public company, you oftentimes have the right to vote your shares, and so you can hire and fire board directors. You can put forth shareholder proposals. You can make quite a bit of an impact in a company. Now, generally, proxy fights are battled through activist investors. You hear them in the press, people like Bill Ackman or Carl Icahn. And they'll take a position. They'll try and persuade other shareholders to join their cause, and then maybe it'll come to a vote in some cases. But yeah, you actually have the power to directly impact the company. Now, if you go back in history, when people actually attended shareholder meetings, or what they were called share owner meetings, people actually showed up. They wore badges that said share owner, and they could vote. If they wanted to yell at management, they could yell at management. If they wanted to ask a tough question, they could. You could really get a read in the room of what people were supporting or opposing. As investing became more widespread in the country, and as back office functionality started to get outsourced, people started to need to vote by mail or by phone, and so the power of the meeting was really sort of difficult to translate to voting by mail or email. The interaction with the other shareholders is really essential to reach consensus. And you have certain bases of ownership that are sort of naturally more engaged. Shareholder employees or employee shareholders, is a common group that tends to care a lot more than the average shareholder. But when you combine lots of shareholders, you can help them be heard. But part of it is you need to verify that they're shareholders. If I want to connect with other shareholders, how do I know that they're a shareholder of the company? And so that's in part what Say powers by partnering with broker dealers and by partnering with companies directly. So Say's partner with Tesla. It allows Tesla shareholders, verified Tesla shareholders, to ask questions on earnings calls and shareholder meetings.
That's great. So it seems like Acorn makes investing more approachable and accessible for an investor, and same with Say, right? Say also make investing much more accessible and much more transparent for shareholders. Let's talk about what you are doing right now, which is a Treasury platform. So can you talk a little bit more about your inspiration, for co-founding the Treasury with Eli Broverman, the founder of Betterment, and the co-founder Bryce?
Yeah. And to back up a pinch on Acorns and then Say, Acorns, creates and supports investors, especially young investors, and to to help create an investor and bring someone to that world, you need to give them access to the whole world. And so Say helps deliver access to that half of investing that had been really missing. And there's a lot of work to do on that side in that world to keep going. Now, Say, that opportunity was identified because we went deep at Acorns into the plumbing. And I actually met Eli through working on Say in New York, and we became friends, and we bonded over having built carrying broker dealers, which sounds extremely boring, but basically they're broker dealers that are responsible for carrying the individual accounts for their customers. And so it's a heavier duty and more significant sort of responsibility entity. And but because we both decided to take that responsibility on, we ended up building better companies and more powerful financial technology. So we started investing in companies together and backing founders, and we found that we were actually helpful in encouraging founders to take ownership on the regulatory infrastructure side of things. And it's something that helped us. And companies that were at a point where they were considering going for a license, that's actually an interesting entry point for us. And so we started to formalize how we invest and decided to create Treasury to back founders that are willing to tackle problems even in the dustier, more dormant parts of finance, and even if it actually requires significant regulatory licensing.
Right. So what is your plan for Treasury in the next, I guess, like year or 5 years? What are you trying to solve for as a fintech, founders in the Treasury platform? Obviously, there's some of the things that you mentioned, like products and also regulatory chance. But what are other things that you want to support, the fintech founders and help people build better products?
Yeah. So we want to support founders in owning their destiny, in their company's destiny, and their product's destiny. And if you think about delivering the best customer experience possible, to truly own that and do that, you have to be willing to take on anything or any complexity onto your side, which may include regulatory infrastructure. And so we want to support founders no matter what they need to build. We're there to help them through it all. And so oftentimes they're the ones doing the work. We're investors and advisors, but fintech begets fintech, and this industry benefits from strong cheerleading. And when we got started, a lot of the investors we talked to hated the regulated side of the business. We were pressured to position our companies purely as tech companies. The fin part was less sexy. Now today, fintech's quite sexy, but I think there are many investors out there that don't understand the process when it comes to actually building out regulated infrastructure. And so we want to help companies and founders take that on if they want to own it. And we think the founders that are willing to take that on demonstrate a maturity and an opportunity that we'd like to get involved in at that point.
Right. So, I think we talk a lot about infrastructure, right? And the barrier for fintech infrastructure has significantly reduced, in the last few years, so that, companies can create or offer financial service product to customers, right? And, I think like infrastructure is something that Treasury seem to focus on. And, I believe like Acorn was built on Blade infrastructure, for example. So can you go into some of the opportunities that you see in fintech infrastructures that you are excited about?
Yeah. So we started working with Plaid back in just before launch, and it was a vastly improved experience for our customers. The team was about 10 people at Plaid, and what's great about fintech too, especially mobile first, is that when a product launches and reaches some success, everyone looks at that product and how it was built and how they delivered that experience. And so, Plaid being a common sort of denominator across many fintech companies is no surprise for anyone that was really paying close attention. So many founders get inspired and sort of have a riff on different ideas within fintech. And so I think that helped them tremendously in growing, and the experience was really suited for mobile. And so, for us to effectively integrate with banks, it was powerful. I think there's other infrastructure. So when you mentioned sort of like barriers to entry, so I think there are some parts of infrastructure that are more regulated, and I think there's pretty significant barriers to entry there, especially because incumbent institutions are reluctant to create maybe what they would see as a redundant entity, and they may have let's take clearing firms for example. They may have a full service clearing firm with all the bells and whistles. Maybe it's paper based, but for them to carry individual accounts, it may be quite expensive. And someone could come to say, hey, you should build a modern clearing firm that's lower cost and digital, et cetera. And they'll say, hey, well, we have this one right here. Let's just make full use of this. Can't we just improve this one? It's like, well, you actually can't. It would be easier to start a new firm from scratch and build that out. But incumbent institutions, they really struggle with that. And so it's an opportunity for startups to tackle those problems. Now, those take year plus to get going. And so it's not your hack it together in a weekend founder that's going to tackle these things. They're founders that have really experienced the problem firsthand and have determination and persistence to keep at it. We think those companies will be rewarded.
Right. And I think like we talk a lot about, fintech founders need, support or cheerleadings from, as a fintech founder. So as a, serial entrepreneur who found, some of the most iconic fintech companies early on, I think I really think Acorn is iconic. What do you think that your experience as an operator and entrepreneurs differentiate yourself than a traditional investor?
Yeah. So, and first off, it's a team effort in building these companies, and the focus on the customer experience really helped us and led us to building, a better product and a great company. And so, like you could see it as our company supports our product, and the company building side of things was actually quite important. When you start digging into regulations, you have different legal entities. The way that these entities and companies talk to each other actually informs the technology that you build. But having that obsession with the customer experience, I think, just naturally aligns us with founders. And so, we don't care about infrastructure for the sake of infrastructure or just unnecessary, regulatory responsibility just to have it. If you start with the customer experience and are willing to build whatever it takes to support it, then I think you'll end up with something great. And so, so for us, it was that dedication. And if you've never built a company or you've never built a regulated entity, it's okay. And we hadn't either before we started, but we stuck with it. We got a grip of the rules and the regulations, and because we were constantly focused on the customer experience, it was really clear as you dig into what you need exactly and where the rules come into play. And so if you flip that, though, it's really hard. If you have some sort of entity you're trying to make use of and trying to shove it into a customer experience, you're going to have a miserable time. It's not impossible, but our obsession is building great products for customers, and through doing that and taking on a lot of complexity and responsibility, we're actually able to build some things that were a lot more interesting and useful than we intended when we set out.
That's great. So fintech as a sector has emerged in the last financial crisis, right? Do you think that COVID-19 has driven or potentially driven more innovation in fintech? And what does that mean for the future of banking and fintech?
Trang Jeff, I apologize. Unfortunately, we need to wrap up here as we need to move on with our agenda, that we're not running too much behind.
No worries.
I do appreciate both of your time for spending this with us virtually around the globe. It was very, very insightful. I have a lot of respect for building companies in the fintech space. I know how tough it is to battle all of those regulations. So I want to sincerely, on behalf of all the audience, which I know that love your talk, thank you a lot for being with us virtually today. Thank you, Tran.
Thank you so much, Philip.
Jeff, very
Thank
much.
you.
Thank you.